Hey, good evening. This is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and how we can look forward for a better trade for the next day. Right. So we had a sell-off day today. Is it going to be consolidation and breakdown or breakdown? No, what's it going to be ahead? No, let's analyze the charts and then conclude on that. So as I say, the pre-market analysis would be for the next day, and this is for April 20th, Wednesday 2022, and we'll be doing it based on all these parameters that you see on the left side and the right side. We would do analysis of the data also, like on those parameters that you see on the right side, and where we look at the global markets, the commodities, the institutional participations, and all these things, and we'll also have some actionables before we wrap up on a view. Right, let's look at this. So look at the candle size, big sell-off, big wide range bearish candle, and Banknifty also big sell-off, big wide range bearish candle is what you see on both indices, right? So that's it. A down day, and more than a down day, it's a shift into the bearishness. Look at this, another view. Left side is Nifty and right side is Banknifty. See, we had a confluent support of different moving averages here, 200, 100, 50, 20, and all this is gone. It's history now because the market is closed. And also the gap support was there near to the 17,000, that is also lost. That's Nifty, right side. Bank Nifty also had a confluence of moving average supports of 220, 200, 50, 100, all this DMA. That's all gone now. Fibonacci 61 was earlier lost yesterday itself on both indices, and there is a retracement Fibonacci basically. So all the supports are gone now. That's the main shift that has happened today, as compared to previous day. So basically 215 points lost in Nifty and 388 net of it's 1% of Bank Nifty and 1.2% of Nifty. Is what what was lost today. In the markets. Both are wide range bearish candles as you have seen. And the price action is a channel breakout that happened. Unfortunately, it has fallen back on the channel right after the breakout concluded much earlier than expected. From Bank Nifty also, it has fallen back into the channel now from where it had broken out, right, with the help of a flag pattern, right. It didn't sustain too much, but it did make big moves, and that's it, right. So intraday is the interesting thing, right. Intraday, you can see it's a gap down of 1.3% on both indices, nearly 1.354. That percentage of gap down is what happened in the morning itself. 1.2, 35% of the total index. So that's big down move, gap down. Yesterday also it was gap down, so down happened. Then it was range bound, but with very volatile. Look at the V-shaped moves. We had multiple small V shapes here. V is an inverted V, so very high volatile, but range bound within 250 points on the Nifty and 500 points on the Bank Nifty. It's what you see. Gap down, then range bound, the white range. Highly volatile V-shaped moves within, and then at 3 p.m. the big crackdown happened, where more than 2.5% of fall happened, and that's how the day ended. Very bearish. So that is what happened today, intraday, right? The reasons behind that, the fundamental news and all may come in later, but the charts are showing that it was gap down, range bound, highly volatile, and then big breakout at 3 p.m. Right? Who did that? Fyers, of course, big selling of 5,000 crores. We'll see that in the next slides. And Bollinger Bands, what are they saying? Till yesterday there was no full confirmation on both bands. On the no consolidation was there. Today it's a confirmation that it's pure consolidation that's going to happen as of now, right? Because the Bollinger Bands have turned sideways on both indices, and there is a bearish bias because it has lost a median value on both indices. And volatility also is not that small, although skews has happened, right? That's what the Bollinger Bands. Support resistance levels. This gap yellow box is no longer valid. That's history. This gap here on the top on Bank Nifty also is history. Nifty lost that gap support. It's filled, means that's done with, and that does not work again, right? So window gap, they're often powerful. If that is breached, then there is very likelihood that it will find it difficult to climb back that again. So the resistance immediate would be 17,000 and 17,050, right? And above that 17,200, 17,300, and then above that 17,350, 17,400, and 17,500 again. 7500, 600, which is Fibonacci 23 retracement level. Above that 17800, 7850, and then you have multiple levels closer to 18,000. Downside, similarly, the support would be 16800, 16900, which is Fibonacci 38, and below that, if that breaches, then 16700 to 750 levels, and then 16550 to 16650. Then below that, you have 16350, 450 levels, which is Fibonacci 50, and that is going to be very crucial support to watch out for, because there is another gap support that is there here. Similarly, the Banknifty, the resistance would be at 37,300, 37,500 level Fibonacci 20. Sorry, that was the place where it slipped down from. So that gap support is history now. It has taken a support. Again, this picture is not clear enough. I'm going directly to the Banknifty and then explain it's better. So, so this is the gap support that slipped yesterday itself, and today it confirmed. So right now it's support at 36,300, 36,800 from 38 level. Above that, you have the resistance level of 36,900, 37,100, that range. That's the first resistance. And above that, 37,300, 37,500 Fibonacci 23, and then 37,700, 800 range, and then 38,000, 38,100. That is where the resistance. Then 38,500, then 39,000 nearby levels. So that's the resistance from the upside. Downside, you have the support 36,300, 36,800, which was breached today. It's Fibonacci 38 also, but it recovered and closed above it slightly. And if that is again cannot be held, then 35,600, 35,900 is where the next support would be. And below that, 35,000, 35,300, Fibonacci 50. If that breaches, then support is at 34,350 to 34,750 levels, and there is another support near the 34,000 level, which is Fibonacci 61 level also confluencing. So this zone of 34,000 is very crucial. That on Banknifty that need to be watched out if the big breakdown happens. Similarly, upside 39,500 would be the place where the lower high, lower low formation gets negated, and then market may be moving up. So these two levels you have to make a note. Let's get back to the slides once again. So that's a support, resistance, and momentum. If you see, it is sideways still, but you can see the momentum is dipping, falling on both indices, right? There is no divergence as of now, but in the medium term also momentum is sideways. It is not gone to the bearishness yet, but sideways on both time frames, higher and lower. Trend indicators have crossed over to bearish zones on medium and short term. That means daily and weekly both it's bearish. Trend shift has happened already. Yesterday only happened, today it's confirmed. Right, and the strength is not that great, on the bearishness. That means bearishness is not big bearishness yet, right? So that's what it is. Weak strength bearishness, trend shifted, momentum sideways, but not bearish. Volatility, and this is BDX is what we use for trend indicators, and RSI, is what we use for divergences and momentum. Volatility again showed up, but still close below the 20. It's 2.5% surge that happened today, and that's 19.7, so very close to 20 levels, which is again getting into the fear is coming back from somewhere, right? Implied volatility is 21.23 for the Nifty, and the implied volatility percentile is 81.93. Again, from 68, 65 kind of levels, we are going back to the 90s. So volatility spiking, be very cautious, right? Looks like there is fear, and fear is there coming back to the market, so you have to be cautious the moment it closes above the 20 levels, right? Because even today it was highly volatile. If you look at it, we had multiple 6 or 7 or 8 small V and inverted V kind of shapes were there, which makes it extremely difficult for people to trade in the intraday and also swing small positional trades, right? And open interest analysis is showing that there is some unwinding is happening on the calls and the puts both, right? On the Nifty, Bank Nifty also, a lot of unwinding is happening, right? On both poles and puts. So it doesn't give a clear picture as of now, but this is expiry for next Thursday, day after tomorrow, and tomorrow is Wednesday, one day before. There will be time decay advantages that starts from tomorrow and day after. April 21st is what the expiry of weekly is. The range that the option writers are saying that 16,500 and 17,500 1,000-point range is where the highest number of puts and calls are put. So support and resistance levels can be seen somewhere closer to that range, right? 16,400 is very crucial support for us, and 17,500 also is very crucial to close above it. So it matches with charts. 16,700 and 17,200 is where the second level of highest put and call writing is seen, right? And put call ratio of 0.41 is bearish, definitely. Short build up is what happened. The futures open interest build up. We are looking at the options open interest till now, but futures open interest is showing short build up in both indices. Nifty is 36,000 and 37,000 point of fluctuation is highest put and highest call writing is where support resistance can be seen. 36,500 and 38,000 is where the second level of support and resistance can be seen. 0.46 of put call ratio is bearishness clearly on the Banknifty also, and futures open interest also is showing a short build up that happened today. So open interest clearly showing bearishness, right? 1 day ahead of every of expiry tomorrow, and we are there is strong call writings that you see all across, and Nifty. Will it hold the 16,500 is the question now, right? Or no? That's more of the question than will it go, climb back to 17,500 level or not, right? Because 17,000 was already given up once today, so that support is already closed, covered, done. So it is a red day. The HDFC Twins did very bad, and the Infi TCS IT stocks also did extremely poor. Lions was only stock along with ICICI Bank. Sorry. Reliance has done extremely well. All the sector selling is what you see on the sector analysis charts. The heat map is showing only Reliance. This is all red. Look at the index heavyweights. HDFC Bank, bearish, losing the support. Sorry, heading into the bearish also on momentum. HDFC also showing momentum decline. Bearish price action. And Reliance has done good. You can see a flag break out after 2 weeks of consolidation. This block out with a large white range candle. Momentum is rising up. What is not decent. So Reliance has done well, right? And showing good momentum, and breakout is what is happening. Infi, pathetic short today. Gone into the bearish zones. Fallen down with a big gap down. Could be the result performance. Earnings result came up recently, I believe. TCS also. Down day, bearish momentum. Slipped from the long channel that it was holding support, even when the war was there. So it was done even worse than when the war started today. Something is wrong with the IT. Okay? Both the IT stocks are done extremely bad. So nothing is there to hold except Reliance. HDFC Twins are doing bad, so extremely bad, and ICICI is good. Right? It has done a range shift and bounce, and green close what you see. It looks like it may be heading further to the next resistance up here. So the trend shift in the momentum, where the shift from the sideways to the bullish on is confirmed on the short term, is gives hope that the price that, and also the channel breakout is also happening, the trend line channel, right? And if there is a close that is happening above the trend line channel, then it could mean that it may further go up. So ICICI Bank done well, Reliance done well, HDFC Bank and Infi stocks done very poor. Kodak Bank seems to be at the major support zone, and then it may not go below that. That's a good support for the Kodak Bank. So momentum is still not slipped into the bearish zones, right? But clear bearish day for today also for Kodak Bank, but at a major support zone as compared to HDFC. HDFC has given up that supports, right? HDFC Bank also has given up the major support zones. Momentum turned bearish also on both. So Kodak is better than HDFC Bank stocks, how they are performing recently. So ICICI and Reliance are doing good. Sectoral performance, if you see, and that was analysis for the index heavyweights. Now we're going to see the sectoral performance. So it was down there, definitely 3% down. Red, momentum is bearish actually. Matter actually, this analysis, the numbers that are not correct thing. Yes, yeah, just yes, that's correct. So it was a big down day, right? Almost all sectors did down. IT sector 3% down, metal 1% down, 1.4% pharma down, auto 1.2% down, FMC 2.8% down, 2.5% down. So everything is down. Nothing is bullish even in the short term. IT is bearish on medium and the daily. So clear bearishness. Stay out from that. Metal is slipped down finally from the sideways. But probably you can take long bets with extreme caution because short term momentum is lost, but weekly the medium term momentum is still bullish on the metal. But otherwise, auto sideways, farmer sideways, FMC sideways, metal sideways, everything is sideways momentum, still not turned into bearishness except for IT. So it's a consolidation mode all sectors, but IT is in selling mode and metal is trying to hold on, but slipped today to the sideways one. Right? Institutional participation gives a clear picture on what happened today. Another near to 6,000 crores of selling today. 5,871 crores in a cash market selling. DA is a buy, definitely. They bought more than what they bought yesterday. Nearly 4,000 crores of buying in the cash, but that's not enough. Right? That's not enough. So institutional selling is continuing, and then that's what you see the bloodbath in the markets. Now look at the USD INR currency pair. Right? It's shooting above 76.5 kind of levels, and then once again it's heading back to 77 nearby all-time high levels, and the momentum is also rising up. So it may once again go to 76, 77 levels, and then there may be central bank interventions that may happen which may pull it down back, hopefully. But how long? Look at where the dollar index is going. It's broken out the 99.6 kind of levels long back, and now it's targeting to hit the 103 point something levels with great momentum trend, everything. So dollar is strengthening like anything. Dollar index is showing clear bullishness. Rupee has weakened, and looks like hitting to 77 once again. So that's not good for markets. Global indices kind of pullback is what is happening, right? Intermediate support is lost in the Nasdaq, and S&P 500 also showing bearishness, and looks like very close, heading towards very close to the previous support zone. Right? So what we have to closely watch is whether it's consolidating and then going to be here at the support zones for a long period of time. Then it should be okay. But are we going to lose it again? This major support that you see on all the S&P 500, Nasdaq, and as in Dow Jones. So if that support is once again breached, probably it may be unlikely that this trend line challenge become valid, and then it may be the beginning of a bearishness. That's what we have to look at. But as of now, it's sideways. Consolidation is what you see with bearish touch, because it is retracing after a big bounce up that happened, recovery, right? So you have to close watch tomorrow morning before what is the picture, because the whole trading will happen tonight in our time. Crude oil also, it's at above 100 levels, 106 kind of levels. But today it was kind of a red day, so it didn't move much up. But momentum is rising, and then it's at very high levels, which again would impact market. Now this is where the danger is. The gold seems to be heading up to make another breakout attempt towards the all-time high level with clear momentum on the short term. Remember, it was it had attempted once, and then inches away it missed that, and then it has fallen back to the support zone from where the breakout happened. Now it has bounced up substantially up. So when gold is moving up, you have to be cautious. Markets are likely to go down. Now two actionables. Reliance Industries, obviously. Reason, good momentum, breakout flag pattern, price action, above moving average volumes, trend and bullish. Right? No doubt about the bullishness of that wide range candle also. Bajaj Finance, FinServ could be a short sell candidate because momentum is trend in short term into the bearishness. It into also it's heading down south. And no support seems to be there. So it can give a clear good trade till the next support down here. So with tight stop losses, you may attempt to trade the Bajaj Financials on the short side, Reliance long side. So overall wrap up, I didn't have to change much on the screen. This is exactly the screen that was there, almost as it was yesterday. Yesterday's view was moderate bearish on short term for today, and that's the same view that continues for the next day also, because that's what the charts are saying. The patterns, the support resistance levels, the momentum indicators, the trend, Bollinger Bands, the trend crossovers, momentum sideways, and all this is right. So recovery had happened, good recovery attempt was there, but it it falls short of the moment to break out further up to take out the lower high pattern yet. For 5 weeks, good work done, but now it is no clear indication that it is retraced more than enough, right? It's giving up all that it gained, and 2 weeks, 3 week, 2 weeks of more than 2.5 weeks of retracement is what you see, and it's given up all the major supports. All major moving average supports is gone history. Even 200-day moving average is gone. So the moment 200-day moving average is gone, you have to worry until it is reclaimed back. So Fyers are aggressive in selling. Yesterday 6,000 crores. Today also near to that 6,000 crores of selling is happening. Crude is rising up above 105 levels. The dollar is shooting up, dollar index, and USD INR rupee is weakening like anything. So global cues and war is still happening. So uncertainty is all around. Volatility very close to 20 levels, and any spikes above the 20 levels indicates that the fear is back. FIs are selling like anything. War and peace talks are still having. So there is every chance that we go back to losing all that gains fully. But there is hope that as of now, the Bollinger Bands are showing that it is consolidation that may be happening. Whether that consolidation will breach when the lower bands move further down and then turn and make another lower low is the only thing that we have to watch out for. So the upside 17,500 and 7,500 initially, and then 18,350 and 39,400 levels is what we watch. Downside 16,400 and 34,000 is crucial support, so you need to watch for the next few days, right? So you have to be cautious. Even if you're doing selling, short selling on the downside, you have to be cautious because you never know when the buy on dips comes in, and then you can get to lose everything, right? So overnight positions if you're taking, any news can come in when you're sleeping overnight, right? So do not take positions without hedge positions, which are risk defined, where you know what exactly you may lose in case something worse happens, black swan happens. So always go for risk defined strategies. Intraday very volatile, very difficult to trade. So tight stop loss is a must, right? Stop loss hits, no problem. You can always re-enter. Your capital is protected. But if you don't have stop loss and you turned your head that side and you lost everything, you're not in the game anymore. So that's the thing. So to wrap up, it's a moderate bearish view that I have continued to be there as per the charts what they're saying, right? Market could stop after a big downfall for some time and consolidates before it decides whether to move up or go down. So that also may happen. So it may not be a bearish moves that may come in the next 2 days or 3 days. It may be consolidation because big down has happened now. Big means substantially good retracement has happened. So the consolidation, then it will decide. So that's my view. So if that helps you to frame your view and your trading plan for the next day, then consider hitting the like button and share to maximum. We have very few subscriptions and I appreciate your help in this regard. Please share, leave comments, like, and subscribe if you're not. Thanks a lot. Happy trading, happy learning. Bye.